Today on our radar is Jana Small Finance Bank, a bank that is slowly making its journey from unsecured microfinance loans to secured affordable housing loans, loans against property. So it's an interesting journey. The bank in its first quarter reported 88% growth in profit, 8% net interest margin, 2% return on assets, all good. But the gross NPAs also shot up 30%, obviously due to problems in the MFI space. We know that the entire sector has its own problems. For a detailed look at this bank's journey towards secured assets, I have with me the big man himself, Ajay Kanwal, Managing Director and CEO of the bank. Ajay, thank you very much indeed for coming by. Well, let me start by asking you, let's first get this difficult part out of the way. MFI. We saw it in other banks, Credit Access, Grameen, Bandhan, everywhere the MFI sector has been in a spot of bother. For you, it is a receding part, but it is still a part. Can you tell us at what stage it is? How bad is the MFI sector? How many more quarters?
Okay. So, Latha, thank you for having me. And first, for all viewers, while the gross NPA has gone up, the actual gross NPA percentage is 2.5%. Yeah. And the net NPA...
The numbers are running as you talk.
Yeah. So, I can see that there. Net NPA is 0.95. So, I think this 30% jump tends to make it look a bit more bulgy. But at 2.5%, it's good for a institution which makes 8% net interest margin. So, back to your question, Latha, on MFI. So, I do think that a couple of things have got together. I think first is a heat wave causing a challenge amongst employees. Employees figuring out that that's not the best job. We've seen an increase in our attrition rate last quarter to this quarter, same time in the year. Second really is there is a real challenge in where some parts are over leveraged. And I think that is largely led through more discipline required at the MFI end. A combination of those two has led to slippages. I do think slippage will continue for this quarter. And after that will be stable. Okay. Because see, if you look at March and June, what has changed? The only thing we will say is heat wave. I didn't see any impact on our book on elections. So that's not the issue, right? But I do see that if you see continuously over the years, increase of average ticket size, so the lending amount is going up. You can see a very fast run in the industry. It's at 25% CAGR. And fundamentally unsecured, bottom of the period, 25% CAGR. Doesn't really say that it's moving at a pace it should move at. Okay. My bias would should move a bit more slowly. I mean, a good 15-20% grow steady over the years may have been a sensible answer for all of us. Okay. But I guess it goes through its cycle. It goes through the bump. You clear the bump, move on. And microfinance is never for the faint-hearted anyway. Okay.
No, of course not. But it's also, it has a bit of social purpose also to it. At least from Ramesh Ramanathan days, there was a social purpose. But Ajay, what is the percentage of your book now in MFI? How much has it traveled from a year ago to now?
So, Latha, we launched the bank with 100% MFI. We're down to 38%. And out of the 38%, 8% is with the banking correspondents who tend to be very local and very good players. So, yes, our journey is to make it 80% secured bank. Okay. We are at 62. Okay. Another 2-3 years of work. And then we should get there.
Okay, now about the secured portfolio itself, can you tell us more about affordable housing? The government has gone ahead with its Awas Yojana. There is a third avatar coming up. Is that helping? What kind of growth do you see in the LAP, affordable housing, in all those portfolios?
So, Latha, when we started the bank, we looked at penetration of home loans in the upper end of microfinance customers, which you can broadly classify as middle India. Penetration was just 1%. Yes. Now, if somebody wants 5 lakh, 10 lakh, 15 lakh rupees, the most logical place they could probably go to was an NBFC. There was no any significant size
even
bank.
Today, that's the only place.
Right. So, we figured out that, listen, at the end of the day, we know customers. We are very good in last mile. We are fully digitized. We need to meet customers' financial needs. Financial inclusion doesn't mean unsecured loans. It could very well mean that I will help you, build your first floor. I'll help you build, cement your house, buy a new house. Yeah. So went into affordable housing. Our affordable housing ticket size is 12 lakh rupees. We are in 180 different cities across the country. We've been doing this business since 2018. So it has seen the COVID cycle also. Okay. Between our micro LAP and affordable housing book, it's a 10,000 crore book now, as we speak.
Okay.
And it's growing, it's the fastest growth engine we've had.
Okay.
Because if the company grew...
Yeah, if you have to split your 2.6% GNPA, how much is in MFI? Who are the sectors contributing to it?
So, roughly about 30% of our GNPA is now in secured. In secured, we have property backing it. So, about 52% is loan to value. So, we'll recover all the money. It's a timing matter.
Okay.
And the rest is in unsecured, out of which a large proportion is with BCs. So, I think they will bear a brunt of the challenge.
Okay.
And about 30-odd%. But remember, our PCR is in the 80s. So, very well covered on the provision on the unsecured side. So, there is not really
So, even with this one more quarter, which you say could be difficult for MFIs, where does your NPA peak, you think?
So, here is how I would say it. We have, last year our credit cost was 1.96.
Okay.
This year we have said we will be in the 1.6, 1.7% range.
Okay.
And sitting here in September, I can tell you that we will be meeting those targets of 1.6, 1.7% of credit cost.
Okay, so you're peaked off on credit cost.
Yeah, two reasons. See, our average ticket size is lower than industry in microfinance. Our growth rate has been slowest. If you take Jana's growth from the day we started the bank, 6 years and 1 quarter,
Yeah.
it's less than 2% CAGR.
Okay.
So we've always been clear in our
Careful
heads
in the
that, listen, this is not a business we want to run very hard on.
Okay.
We entirely graduated towards secured.
Okay.
And like you said, social purpose, we moved away from consumption to lending for businesses.
Yes.
We are lending for affordable housing. We are doing two-wheelers. We are lending to MSME. So it's a whole different institution now.
Okay. Let me come to the cost of money. You said that your cost of funds is lower than others. What is the breakup? And now, will it willy-nilly your cost of funds go up? Have they gone up for Q2?
Okay. So Q2 is public. I've cut my deposit rates. My peak rate was 8.5% in quarter 1. It is 8.25 from 1st of July.
Okay.
I can also see the market is, the peak fights rates have come off across banks. So I would think that cost of funds have kind of peaked out. I guess not just for us, for everybody.
Even the likes of HDFC are giving 8+ in some buckets.
Yes.
Of course, large loans, large deposits.
So here is how I'd say. I think the gap, see, if you're a small finance bank launched in 2018, people don't know you, it's another level of premium they would expect.
Yes.
6 years later, listed bank profitable, then the premium
lower.
obviously narrows, rightfully so. And existing customers are more
So your average cost now is 8, you would say?
8%.
For incremental.
But listen, we are a bit more, our LCR, which is the norm of how stable is your money, is above 300%. The RBI norm is 100.
Yes.
Industry average is 130. 132 if I'm correct. Now we've chosen to do a lot of non-callable and more than 1 year tenors.
Okay.
Because listen, what we don't want to do is look back and worry about liability. So I rather pay 20 bips extra and be in the high zone of making sure my deposits are more stable.
Okay. So will 8% be manageable, the margins?
So our NIM is 8. I do think it will remain in the same range. Purely because we are a retail business. And even an MSME, my ticket size are 40 lakhs.
Okay.
So I don't see how margin compression is not what we are seeing. What I can see is, there is no more lazy banking as an option.
Of course not.
As long as you're working hard, you're going out meeting customers, there is so much business. And Latha, I must say the amount of business we see in the small and medium enterprises is really very good. I mean, I'm amazed the amount of orders. If you're in the defense supply chain, you are in the solar supply chain, you're in the EV supply chain, if you're in the infra supply chain. I mean, because we can't certainly finance infra, but we certainly finance all the supply chains, the smaller enterprises.
Yeah.
I think there's a boom going on.
I noticed that your cost to income has actually fallen a bit to 55 from 56 and 58. What is the investment in technology? Because that will, the digitization of so many things and digital footprint should make lending more safe. So will this cost to income come down or go up actually?
So first is fully invested in digital. And luckily, and you mentioned Ramesh's name, I must give him credit. In 2014, he gave IBM the contract to set up a single, the single technology provider. That backbone hasn't changed. So 98% of savings is digital. Our affordable housing loans, same day sanction. With no compromise on process because it's end-to-end digitized now. So I think digitally we are well invested in, but we would never say never, so it keeps going on.
Okay.
Cost income is a function of the way we think about cost. So we are very, very frugal.
Okay.
We have basic disciplines, Latha, and I must tell you, coming from a foreign bank, it's been a tough one. We have no cabin policy.
Okay.
We have no business class travel. We don't have zonal offices.
That
we are
makes
fully
you
digitized.
similar to TV18, I must say. We have no cabins, no business travel. A very quick question.
Yeah.
Your peer company, AU, has applied for a universal bank license. Is that your final goal?
So we
and
have,
how many years away?
We have said, Latha, that there is one condition that we have to meet, which is net NPA has to be less than 1% for 2 years in a row. That's one condition we have met last year, but we need one more year.
Okay.
After that, we certainly would like to go on that path.
Oh, that's interesting. It's going to become a trend. Ajay Kanwal, out of time. Thank you very much. It was a pleasure. And thank you for dropping by in our studio as well.
Thank you so much.
That's the word coming from another small finance bank. Goal ultimately is to get universal bank license and good on several parameters. We wind up Bazaar on that note. Short past is coming.